So we're a quarter of the way through the year, and we've already seen a lot of accomplishments in advocacy. We had NCUA's Field of Membership proposal, and we asked credit unions to weigh in support of the proposal, and boy did they ever. We had more than 11,000 comment letters on the Field of Membership proposal, and that really helped set NCUA in the right direction as they move to finalize the rule, hopefully later this year. We also saw NCUA finalize the MBL rule, the Member Business Lending Rule. This is a really important new regulation that removes from regulation requirements that aren't required by the statute. So NCUA has moved in the right direction on MBL. Some of those provisions go into effect in May. Others will go into effect at the end of the year, but it's a really positive result. We've also seen progress on the overhead transfer rate. We've been asking NCUA for years to publish the methodology behind that, and they've done that. It's out for comment right now. And we're making progress on exam frequency. We've asked the agency to make exams of federally insured credit unions less frequent, and they're responding. First they said no, and then they said, well, we'll see. Now they're talking to us about how could we make that work, and they've said, listen, we're not going to be able to do it right now, but hopefully by the end of next year we're going to have a system in place where we can start moving towards less frequent exams. We're working with the agency on that. But that's not all. We've also seen some progress on a rule at the FHFA dealing with Federal Home Loan Bank membership eligibility. We had a problem with a provision in FHFA's proposal. We asked them to remove that provision. We worked with Congress to put some pressure on the agency to remove that provision, and in the final rule, it was removed. A very positive result. We also won a lawsuit in Texas on interchange surcharging, pushing back retailers' attempts in that area. And in a tax bill that was introduced earlier this year by Representative Devin Nunes, we were able to secure a specific exemption in that comprehensive tax reform bill, a positive result for credit unions. And one of the biggest accomplishments we've had this year has been the response we got when we asked members of Congress to weigh in with the CFPB on the exemption authority question. We have been putting a lot of pressure on the Consumer Financial Protection Bureau since late last year to use with greater alacrity their exemption authority under the Dodd-Frank Act. The act is clear that they have the authority to exempt any class of entity from their rules. And so going into the GAC, we asked folks to hike the hill and ask their members of Congress to send a message to the CFPB that they need to use this authority more often to tailor their regulations so that they don't have an adverse impact on credit unions. And the response from Congress was unprecedented. We had 329 members of the House of Representatives sign a letter representing majorities in both the Democratic Party and the Republican Party. They sent a very clear message that they don't want the CFPB's rules to adversely impact the way credit unions serve their members. A very powerful message and a very big accomplishment for our 360-degree advocacy efforts. So we're going to build off of the momentum we had with the letter that was sponsored by Representatives Schiff and Stivers. We saw in March in the Financial Services Committee members of Congress picking up off of that theme and asking Director Cordray about the Bureau's exemption authority. And we're going to have two opportunities for that to happen again in April. The first is going to be on April 5th in the Senate Banking Committee. They're going to hold a hearing on the impact of consumer finance regulation on financial institutions. And at that hearing, one of the witnesses is going to be a gentleman by the name of Leonard Chanin. And Mr. Chanin is important for a couple of reasons. One, he is the former Assistant Director of the Office of Regulation at the Consumer Financial Protection Bureau, but he also authored our legal opinion memo on the CFPB's exemption authority. So he's helped us make the case, and we expect that as part of this hearing, he's going to continue to press this point that the CFPB has greater exemption authority than they've used to date. 2 days later in the same committee, Director Cordray is going to have the opportunity to testify, to deliver his semi-annual report on the activities of the Bureau. And we're hopeful that at this hearing, members of the Senate Banking Committee will pick up on the theme that the members of the House Financial Services Committee did and press the director even further on how the agency has used its authority and how it's going to use its exemption authority going forward. So two very important opportunities. There's a third part to this as well. So in March, Representative Stivers sent a letter to the Appropriations Committee urging them to include in the Financial Services Appropriations Bill language that encourages the CFPB to use its exemption authority. We expect as the appropriations process plays out that these issues will further develop. It gives us another opportunity to continue to put pressure on the Bureau to use its authority with greater alacrity. So exemption authority isn't the only issue that we're interested in having a part of the appropriations process. The Appropriations Committee in March had a series of deadlines where members had to submit issues or projects or funding requests to the committee. And we saw several members of Congress submit requests for inclusion of CUNA-supported regulatory relief legislation. Representative Andy Barr asked the committee to include legislation that provides a safe harbor from the qualified mortgage rules for mortgages held in a credit union's portfolio. Representatives John Culberson and Roger Williams asked for language to be included that would automatically exempt credit unions from CFPB regulations. In addition, Representative Culberson asked for language that would increase the credit union member business lending cap to 27.5%. Representative Blaine Luetkemeyer asked the Appropriations Committee to include language that increases the small servicer exemption to 20,000 mortgages and exempts certain high-cost mortgages from appraisal requirements. And Representatives Crescent Hardy and Steve Knight asked the Appropriations Committee to include language that would prohibit the Department of Labor from enforcing its proposal on overtime rules. So the appropriations process is a long process. We're at the very beginning stages, and frankly, it's unclear if Congress is going to pass all 12 of the appropriations bills or if they'll do an omnibus bill. But having these members of Congress weigh in at this stage is really important to making sure that throughout the process, our priorities are at the table. So we're greatly appreciative of the leadership that each of these members of Congress have shown, that the 329 members of Congress that signed the Cordray letter showed, and we're going to continue to press these issues throughout the remainder of this year.